Welcome to SPC Spotlight, the podcast where we shine a light on the people and ideas shaping the future of business from Sharjah and beyond. I'm your host, Wafa, and today we are exploring the world of finance, specifically how businesses can access fast and flexible capital to support their growth. To walk us through this space, we are joined by Suraj Gopal, Head of Partnership and Business Development at CredibleX, a platform that helps SMEs raise working capital based on their business performance, without the usual banking delays, paperwork, or rigid requirements. If you're building a business and want a smarter way to access funding, manage cash flow, this episode is for you. Let's get into it. Welcome, Mr. Suraj. Mr. Suraj, let's start with what every businesses suffer at some point. It is funding, right? So why is it still so hard for SMEs and startups to get funding from traditional channels?
Well, if you look at the alignment or understanding of SMEs, right? Unfortunately, there are different sets of SMEs which the banks would be comfortable with based on their evaluation techniques or criterias, whereas some SMEs would not fit into. But one of the major things I would say is ensuring you have the right kind of documentation, the right kind of information that could be shared to show that your business is operating well, your creditworthiness is well, your ACB scores are well.
Yeah.
And sometimes this mismatch or misalignment or not having the understanding within SMEs that they could much easily acquire funding from traditional sources as well is what lands up into this kind of a situation where they feel they're not able to raise. Having said that, you're talking about 600,000 plus SMEs currently operating. 9 to 10% of those SMEs have been able to raise capital. These numbers used to be drastically different probably 5 years back, right? So there's definitely much more improvement in terms of looking at SMEs differently, evaluating them differently. But I believe from an SME standpoint, there are so many more avenues like alternative funding channels, traditional but digital. So it's more about understanding of how you can frame your business to be displayed as a more creditworthy business in the eyes of the funder.
Yeah. And based on your knowledge, what do you think are the common roadblockers for these startups or SMEs to get this type of funding?
So roadblocks, generally, if you look at how businesses operate, right? They are champion-driven businesses. So somebody who's really good at the operational side of business looks at venturing into an entrepreneur journey.
Yeah.
And they're really good at it. They would be definitely able to do the work better. But for raising funding, you need a certain level of information sharing, credit score, maintaining your credit scores better, which would ultimately, when a bank is looking at the financial performance, the business performance, and the individual's credit scoring in general, it should all line up for the funder to feel comfortable that, okay, this particular lending has been given and the chances of repayment are more. And that's how the valuation would be there, right?
Yeah.
So this is where some of the roadblocks can be corrected if these SMEs and the SME owners are able to understand that part. So similarly, on the banking side or the traditional side, they also need to understand that the landscapes are evolving. Some of the activities, some of the sectors that was not in existence for 5 years back are thriving now. Like you take your logistics, P4PL delivery, last mile delivery businesses that probably wasn't there 10 years back. But now they're one of the most competing and good businesses. And I believe a lot of these e-commerce businesses. So the way how it has to be evaluated is also to be revised or relooked at from a bank's perspective. And last point I would like to say is from a roadblock point of view, it's about awareness, which I touched on the first point.
Yeah.
If SMEs are looking at, evaluating at what options they have for funding, they should not just look at the traditional, but also the alternative funding, the fintechs, the digital side of things, because that could open up a lot more doors for them.
And usually these types of businesses avoid nowadays getting these long-term loans, also giving up equity of their own companies to either banks or other like companies in order to get this type of funding. Why do you think this shift is happening specifically nowadays?
That's a wonderful question. So
Thank you.
if you look at, let's look at into the recent past, right? COVID 21,
Yeah.
22. Most of the businesses that struggled during COVID were not necessarily the ones who were looking at debt at that point in time. Somebody who took a loan in 2019, 2020 for a certain purpose, but the particular loan was a 4-year or a 3-year loan,
Yeah.
unfortunately faced trouble in paying EMI for that funding that was taken. But if a purpose from end to end is within 3, 6, 9, 12 months or 8 months, then if the products are designed as close to the purpose and the time requirement, then the chances of it getting repaid is better. And also it saves on a lot of their profit margins.
Yeah.
Because from a calculation point of view, if you look at a loan being taken and repaid in 2, 3, 4 years, you are doubling, tripling, or quadrupling your interest or
yes,
payout back to the funder.
Yeah.
But if you're looking at an 8-month trajectory where you're placing a purchase order, shipped, received, sold, waiting for the credit term, you're talking about a 6 to 8 months timeline.
Yeah.
So if your funding product is aligned in that direction, it's easier, right? And you save on a lot of margin. So I believe a lot of these entrepreneurs, given that unlike the traditional SMEs who only had the option of a product that was 2, 3, 4-year term loans, now with fintechs, digital institutions emerging with dynamic products that are more inclined towards the purpose and the time, they have these options. And you can find that they were always looking forward to this.
Yeah.
It's just that the options were not as freely or frequently available to certain SMEs below a certain revenue size.
Yeah. And CredibleX is your company, of course. I was hoping like you could introduce it in general for people who do not know what CredibleX is and introduce exactly how it offers something different to this space in general.
Surely. So CredibleX, from a licensing point of view, was established in November 2023. We have ADGM licensing category 2, 3, and 4. Now, what that does for us is category 2 enables us to do on-balance sheet lending. Category 3 gives us the option to do payment services, and category 4 helps us to operate as a marketplace. In terms of our shareholding, we are part of Further Venture Studio, which is a venture studio based out of Abu Dhabi. And the Further Ventures, a venture studio, was formulated out of a joint partnership between ADQ and MasterCard.
Amazing.
So the best part is we are able to operate across UAE in that sense through our embedded finance logic, where we are partnering with non-financial service providing platforms.
Yeah.
And then looking at the SME ecosystems in that space and connecting to their respective SMEs through that channel.
Yeah.
So that kind of gives a very seamless end-to-end personal touch point as well, where the SMEs are able to freely apply by using their SME ecosystem, and creates a win-win for both parties, because
Absolutely.
the SME ecosystem will become a one-stop solution. So for example, if I take SPC Free Zone, you've got e-commerce businesses. They are happy to operate because you provide one of the best services.
Yes.
But imagine if you're also able to give them a portal for where they can apply for funding, gets done in 3 days in terms of an approval, in terms of an understanding that, they are creditworthy for this much. Then when they're renewing, they're always thinking SPC is not just a office space. It's also providing us the flexibility, the options for us to grow and considering it.
Yes.
So top of the mind stickiness for the partner, plus CredibleX is also able to leverage on that.
Yeah. For us at SPC, having such types of partnerships is very, very valuable. We have a lot of clients who do ask for funding, who do ask for support after getting the license. I believe CredibleX can fill in that gap. Can you walk us through the process of from start, I'm a business owner or a startup or an SME, and I'm interested in working with CredibleX. How would I go about that journey?
Surely. So our introduction, or the digital touch point through which an SME is able to apply, is the digital portal, which is created white labeled for the SME ecosystem provider like SPC Free Zone itself. The SME can apply through the portal by creating their own login, and it takes about 5 to 7 minutes to update information requested, like how long the business has been operating, what sector they are into, where they're operating from, uploading documents like trade license, constituted documents, banking documents, bank statements or VAT and those things. And once those documents, relevant documents are updated or uploaded, we do have a very digital KYC approach where the owner or the shareholders can digitally verify their, say, Emirates ID as a documentation and biometrics.
Yeah, KYC.
And yes, the end-to-end is completely digital. So once the application goes in, it goes through the assessment process where we have categorization tools, business intelligence tools that break the data into further reports, which is easier to analyze. And once it is approved, completing the sign-offs, the securitization documents, if I may say, like the loan contracts and other things, they are able to avail the funds. So if a business is applying for funding, I would say within 48 to 72 hours, they would know that they are eligible, or if there are further things that we need to, get done.
Amazing.
But that's what we have seen. One of the major things that we have seen.
Yeah.
And on a second note, I would like to say that it's also depending on the product proposition, right? So if somebody is looking for short-term working capital, that's much more aligned with what we are looking at. But long-term capital requirement-based lending, that would be something that we will have to reevaluate because that's more of a longer term.
It depends on the amount, or it depends on the size of the company?
It depends. We service anywhere from the lower end of the spectrum for SMEs to the higher end. But it depends on what is the purpose, repayment duration, and the fact that we are trying. So if it's a short-term loan requirement, it's time sensitive.
Yeah.
That's where we come in as well. As I said, I would want to believe that there are other institutions which would be doing within this timeline, but we do 3 to 5 days, for example, or 48 to 72 hours, as I said, where we can come back with an approval. That's where the SMEs really have the worry. It's not that they would be getting the funding in a week or two. It's about, are they eligible? Are they credit worthy? Or do they have to knock 5 doors before getting one?
Yeah.
Probably that's where we have an edge. Our USPs could be, I can say, speed, transparency, because our communication lines are through emails and messaging.
Amazing.
And the fact that we are very transparent. So the digital portal through which they are logging in also gives the status, the updates. Once the loan is dispersed, all the updates. So
and how flexible are the payment structure, and how connected are you to the client after finalizing the deal with them?
We do. So flexibility on payment terms would go back to the purpose and the products. Let me reiterate it through the products itself.
Yep.
So if a customer, say a trading enterprise, is looking to purchase stocks for a certain purpose, or a manufacturing firm is looking to purchase stocks from, say, Taiwan or China or any other places, and the shipment will come in 60 days or 90 days, post which they can make the payment, but they have to pay in advance, right? We can give a supplier financing. Now look at it from the point to the clients. So a business having done a service or a product delivery or anything to a paymaster, a client, but the credit term says they'll get the payment after 30, 45, 60, 90 days. We can look at those invoices, and then against those invoices, we can advance funds, which the SME could use. And once the paymaster is paying back on the invoice, it gets settled on that. So these are all 90 days, 60 days, 45 days. Even if businesses are in the B2C or omni-channel space, where they're looking for growth funds against their forecasted revenue from POS, e-payment gateways, or online aggregators, we could look at a EMI-based structure up to 12 months against those revenues. So it's very flexible depending on the purpose, the business sector, and what they're looking for at the end of the day.
I like that it's flexible, at the same time it's case by case. Can you mention perhaps some case studies or some memorable success stories that you guys went through and the client was happy with the service? I would love to hear a little bit about actual real life cases.
Wonderful. Actually, our client base currently stands between 80 to 100 clients that we have serviced in the last year. All of them are pretty memorable from its own point of view, but 2 of them that mainly sticks out to me, which I could share, is one, we have a client who is into training specially abled personalities. And they had insurance requirements, for example, to purchase for medical reasons. But cash flows was always an issue because when these payments come in, there are a lot of things backriding on it. You have your rental payments or salaries and all that. So cash flows are a bit tight, right? We evaluated, we saw the potential, the ability to repay, and we provided funding for that particular purpose of insurance purchase through one of our channel partners.
Mm-hmm.
And that kind of broke the entire payment into 3 or 4 months of payment, which kind of evens out your cash flow. It helped that business to operate better with cash flows wise because that consolidated amount was split into digestible bits where they could pay easily.
Mm-hmm.
And at the end of the day, it kind of eased out their requirement because they had the insurance in place, for example. So that's one of the stories that I could recollect and remember.
Interesting.
Second one I would say is there's one of the leading brands which wanted to look at expanding within UAE. But to lock in a certain place, they had only 5 days to confirm and pay.
Mm-hmm.
We enabled that in 3 days.
Amazing.
And they were able to secure that place against a competitor who took a lot more time.
Yes.
And they were really happy, and they have been a regular customer of ours with repeat transactions. So I would say that kind of opens up employment opportunities because a new branch, and they're simultaneously opening up multiple branches, but a new branch would mean more staff, more in-country value being developed, where you are purchasing local stocks, you are probably manufacturing locally, you're selling locally. So all that factors added up and made it a memorable experience, I would say.
Amazing. I would be happy if I was him. Just a general other question is, now that CredibleX is created, and I'm pretty sure it's inspiring a lot of people to work with you, work with SPC, and get started basically on growing your dream in general. Do you think that such an institute will affect the funding system in the UAE in the future? Do you see it changing a bit, or do you see like certain people belong to this sector, but others will stay within the traditional realm of like going to the bank, getting the loan, and doing the long-term thing?
Interesting. Yes, I mean, I would say this landscape is evolving a lot more than what we had seen pre-COVID. I would say COVID was good and bad for its own reasons.
Yeah.
But from a IT acceptance or acceleration point of view, it was pivotal. Mainly because a lot of companies realized the business continuity plans could be disrupted, and they have to have a digital strategy towards a lot of things. And that enabled, again, accelerated the acceptance of fintech in the financial services space, right? I would say most of the fintechs are just unbundling of various banking services. So bank would have different activities within a single umbrella. If you unbundle, each fintech is contributing to it. So some are into payment platforms, some are into lending platforms, some are insurance oriented. So there are multiple activities that are happening. In lending landscape alone, if you look at the alternative lending, which is fintech is a part of, prior to 2022, you would have probably 2 or 3 operating in UAE, but now there are more than 7, 8 players. That acceleration has happened because it's not that fintechs would replace traditional banking in any sense. It would work more closely, more symbiotically, where these banks would find value addition by aligning with fintechs and vice versa. Because fintechs would get more scalability through these institutions, and banks would be able to explore those synergies, lower their cost, speed up their processes, all that kind of advantages. So it is going to change the landscape even, as we move forward, because UAE is definitely becoming a hotbed for talent, for people, for businesses. I mean, I was just reading one of the reports where the population that used to be 10, 12 million is touching 15 million.
Amazing.
It's increasing. I mean, it's going to be a totally different world in the next 5 years, I would presume, from a UAE perspective.
Especially for like companies like CredibleX being in the the system and helping these startups like fulfill a certain type of dream, or at the same time reach amount of fundings that they thought were not accessible to them because the bank was not accepting, or other traditional ways of like giving capital, it seems a bit more difficult, especially when you're starting. Giving up capital can be very precious to them. So can you tell us in general about CredibleX in the future? What are we excited about? What can we look forward to? Because here at SPC, our clients and also SPC itself as a free zone will be looking forward to any updates from you guys, any something new that we can maybe offer to our clients that can support them in their journeys as well.
Surely. So, on a CredibleX point of view from future outlook, I would say we are aiming for our company to be from UAE to the world, where we are able to help out as many SMEs as possible while making sure that the right kind of assessments and the right kind of products, fitments are available for them, right? But in the near future, I would say we are looking at supporting businesses from every direction who looking at, for example, short-term loans, trade financing to a limited extent, supporting the growing IT sectors, the e-commerce sectors, because we are able to do that from using our own digital evaluations and much faster.
Yeah.
So probably you would see that on occasions when there is Black Friday or a White Friday, whatever the term is used for that period,
Yeah.
normally there is a lot more purchase requirements that comes apart from the regulars.
True.
And that's where we are much faster in servicing a need in a shorter amount of time. So it depends on how you look at it, but I would say from an SPC angle, probably your number of businesses are definitely growing in thousands on month or
Yes.
more than that, if I may. And once they reach a certain age and they are looking at raising debt, and one of the earlier questions where you asked balancing between equity and debt, right? Whether you sell off your equity or whether you raise debt, I think it's a balancing act. But when they're looking for debt and they are meeting the criterias, we are happy to help from SME ecosystem point of view for SPC.
Yeah.
And I think that's where the digital touch points would enable them to do it more faster and seamlessly.
Amazing.
So I think this is the start to a growing and long relationship with SPC and CredibleX.
True.
So looking forward to more such interesting conversations and providing guidance to SMEs within your ecosystem if they need it.
Amazing. Looking forward to it as well. Can we delve in a bit deeper when it comes to CredibleX? Let's talk a little bit about how simple the process is. How manageable is it for someone to just come to a CredibleX or log in online and reach out to you guys for something related to funding?
Surely, Wafa. So CredibleX is a completely end-to-end digital journey, digital process that we enable. From the point of applications, unlike many institutions that depend on hard copy documents or bank stamp documents, we could look at digital versions of it from the online banking, for example. VAT is downloaded from the Federal Authority portal. It can be easily uploaded onto the application system. In terms of how we look at it is this process can be done right sitting in your office. You don't have to revisit or do multiple visits to a brick and mortar facility of any funding institution, and the entire communication is very timely and prompt. So what that does is many times you could see, or many of the SMEs feel that their application has gone into a black hole and the communication is not as they expect because there's a timer around the funding requirement because it serves a purpose, whereas the communication is not coming as regularly to keep the anxiety levels low.
Yeah.
Whereas we do make sure that our communications, our touch points, our feedbacks are received on a timely basis, and that helps us also to provide an approval understanding within 3 to 5 days. So, I would say 3 days pretty much, but if there's something more with regards to certain transactions or certain information about the business that we need to know more, could get stretched a bit. But ideally, you would find 48 to 72 hours for SMEs to get a response. That helps them a lot.
Interesting. And does the type of business affect your timeline? For example, if I'm starting an e-commerce company instead of like, let's say, a financial focused, like finance focused company, or I'm doing something a bit more like considered a risky activity, or for example, general trading, something a bit different than the easy e-commerce. Does that take longer? Do you need extra documents? Is there an extra KYC on it?
Well, and I could probably align a bit more information in terms of how we would be different on that question as well. So the traditional institutions focus on information that are available from public domains or private domains like AECB, bank statements, VAT, right? But the best part about our business model, which is into embedded finance, is that we partner with non-financial service providers like SPC itself, and we are able to extract data from the ecosystem provider. So there would be a lot more understanding about the business. So somebody in the e-commerce segment has been operating for 2-3 years, has had a good flow on the business through online portals during a certain season, and are a bit low on other seasons. But they're trying to apply during the low seasons. They will come out at somebody who's struggling with cash flows. But if you have an overall picture and the information that they are probably servicing the likes of Noon, Amazon, other platforms, Namshis, whatever. But these businesses would then be able to be in a better spotlight because you have more data for evaluation, more understanding about the business to be able to give them a facility that they would be able to use during or building their business during their working capital requirements. So this is where we would stand a bit away from the traditional institutions. And in terms of the businesses, whether they are high risk, medium risk, or low risk, depending on the kind of nature, activity. It depends again on the kind of transactions they do. There are so many businesses who probably hold a general trading license but are doing very specific activities, like somebody in the medical equipment space selling to some of the top medical institutions here might have a general trading, but that's where we dig a bit more deeper into what they're really doing. And then we can evaluate it better.
And you get these documents from the SMEs themselves or from like other corporate like partners, for example, such as SPC?
Yeah, absolutely. So we have designed our system to allow dual methodologies of applications. The portal enables the SME owner or their staff to apply for the funding requirement on behalf of their institution. Even if SPC has a team that is helping from a customer service point of view, this added service to the SME, they can equally log in. Where we would be able to help out is, as I mentioned, the KYC process earlier, right? This goes as a separate link to the owner where they can do it using their phone camera or laptop camera and just get it done even if they're traveling or they're in UAE or busy with work. So that kind of keeps the application and the verification process much more simpler. Because many a times you would find the SME champions or the owners busy with multiple things and won't have the time to even do a 5 to 7 minute of login. But they do have a team of finance managers, accountants, administrative staff who can actually do it. So we made sure we were as close as to the market reality to understand this and design our system, design our portals in such a way that the applications are much more easier. And ultimate is the outcome, whether they are creditworthy to get a loan or a funding line that they need for their purpose.
Yeah, I like it. Easy, simple, and online, the UAE way.
Absolutely.
I'm pretty sure our followers and watchers have enjoyed the conversations. Thank you for your time. It was a pleasure having you.
It was my pleasure as well, Wafa. Thank you for
Thank you. That brings us to the end of today's episode. If you're an entrepreneur or just exploring smarter ways to fund your business, head over to CredibleX.io and check it out. And if you've enjoyed this conversation, make sure to follow and subscribe to SPC Spotlight for more stories, insights, and bold ideas from people shaping the future of business. Thank you for tuning in. I'll catch you in the next one.